In couple of days, Powell will enter into podium at 2:30 p.m. Eastern Time at January 28 and deliver the first Fed policy signal of 2026. And based on the historical data, what happens after the announcement within 48 hours will determine what happens to the Bitcoin's trajectory in this quarter. Right now, market is expecting 3.5 to 3.75 percentile of rate as intact. So here is what retail gets wrong. The decision doesn't even matter. What actually matters is Powell's future guidelines, whether he will be signaling one cut or two or more other cut in this year. That is the most important part of this meeting. I am going to show you the exact positioning strategy that is used by most of the institutional investors right now. These positioning strategies are largely based on the previous data, like data from 2019, post-COVID easing, and the last December cut. Everyone got misled. Okay, let me start with what we actually know and what are other people speculating. Fact 1, Jan 27 and 28 is a 2-day meeting, not just a 1-day announcement. The first day will be the internal deliberations. Day 2 is the vote and the press conference. The interesting thing about this meeting is that this meeting is a projection meeting, meaning we get all economic data that Fed is analyzing for the couple of months in this meeting, and also we will get an updated dot plot. This meeting 4x more important than all other non-projection meetings. Fact 2, CME Fed batch shows 83% of for no cuts, and other case 17% chance to cutting to 3.25 to 3.5%. So that means the market is already priced in for the 83% of the probability. Fact 3, the December dot plot projected only one cut in 2026, but bond futures will expecting 2 cuts in 2026, one in the mid 2026 and other in the Q4. That is a 25 basis point difference between Fed guidance and what markets tell. And this gap will create a volatility in the market. What we don't know is that whether Powell will push back on this market expectation or agree upon. If he pushbacks, then Bitcoin will drop. If he agree on the 2 more cut scenario, then Bitcoin will rally. And we don't know what will happen until Jan 28 2 p.m. Eastern Time. So how do you position yourself if the outcome is binary? So in this case, you don't guess, you prepare for both scenarios with a risk managing strategy. There are 3 realistic scenarios for the January 28th. I'm going to give you the Bitcoin's probable reaction to each scenarios based on the Fed's historical data. Scenario 1, Fed hold the rates at 3.5 to 3.75% itself, but Powell signal inflation concern and he will push back the chance for the 2 rate cut in 2026. He may say something like, we are watching the data very carefully, but we are not in a rush. One cut this year is much more appropriate right now. And if we will take a further move if the data changes. The market reaction will be immediate sell-off. 10-year treasury yield will spike around 10 to 15 basis points. Dollar will strengthen and Bitcoin drops around 5 to 8% within 24 hours, potentially testing 85 to 87K. While we look into the historical comparison, this is what happened in December 10, 2025. Fed cut rates as expected, but the next year dot plot showed only one cut in 2026. Bitcoin fell from 106K to 86K in 48 hours, literally down 19%. If we get the hawkish roll, the best move will be cutting your positions before the meeting or buy put options. That will help you for hedging your positions. And don't try to catch the exact point. Wait for technical support around 85K. Scenario 2, Fed hold the rates as expected, but Powell say it is balanced. He acknowledged the inflation is sticky, but he says that we are confident in the trajectory. He leaves the door open for 1 or 2 cuts in 2026 if data cooperates. This is neither a dovish or hawkish sentiment that Powell introduced here. This will be a market which is more choppy and range-bounded after the reaction from this neutral decision. Bitcoin probably stay in around 90 to 95K, maybe in days or weeks. In this case, there should be low volatility and low convictions. Most of the people will be waiting for the next catalyst to kick in. Historical comparison, if you compare this to July 2019 FOMC, this is the time where Fed cut first time over a decade, but Powell says it's a mid-cycle adjustment, not the start of easing. In this case, market were chopped and gone sideways for a couple of weeks before finding a direction. If we get the neutral hold, the best strategy will be not doing anything. No new positions, just manage the existing positions. That's it. And you need to wait for the next breakout to kick in. This is a do nothing scenario. It's better to do nothing in this market. Scenario 3, Fed holds, but surprisingly, Powell will sound more dovish. He's emphasized on the cooling market of jobs and mentioned the downside risks of lack of jobs, and then he will hint that there will be more cuts will be coming than what dot plot suggests. He could say something like, we are watching employment very seriously right now. We will act accordingly if conditions changes. The market reaction will be a risk-on rally. Treasury yield will drop. Dollar weaken. Bitcoin rally 5 to 10% within 24 hours or something, maybe 48 hours. Potential testing 100 to 102k. Historical comparison, we can relate this to September 2024. Fed cut around 50 basis points and signal there are more cuts are coming. Bitcoin rallied from 60k to 73k in 6 weeks, like around 22%. If we get the dovish hold, the best movement will be aggressive accumulation from the start, targeting 105 to 110k till the Q1 ends. This is a low probability but high reward scenario, but you must act very fast if this became a reality. So there are 3 scenarios and 3 reactions and 3 trading plans. But here is a critical insight. You don't need to guess which one happens. You must need to prepare for all 3 conditions. Here is your actionable positioning framework for a couple of days till January 28th. The phase 1 run from today, whichever date you are watching this video, till Jan 24th, 4 days before meeting. This is your accumulation or de-risking window before the Fed's blackouts begins. If you are a conservative trader, you are holding around 3 to 4% of your portfolio in crypto. The best thing you can do is that reduce to 2 to 3% now, like by trimming 25 to 40% of your portfolio. Take profit at 93k level at the current time if you are still significantly up from the Q4 of 2024. This will protect you against the 50% chance of the hawkish move. Action 2 for the conservative traders, set limit buy orders between 87 to 82k. If we got the hawkish news, then the better position while Bitcoin dumping is that points. So you can buy the dip. If we don't get the dip, it's okay. You already made a profit because it already went down. If you are a moderate trader with 7 to 10% of crypto allocation, the best thing is the hold core positions, but you need to hedge with 10 to 15% of the cash of the entire portfolio. Don't sell anything, but you need to manage the volatility by using some risk management strategies. You need to consider buying short-term put option as a insurance, like the March expiry put option at 85k strike rate, like 2 to 3% of the position value. If Bitcoin dumps, your put will be in the profit and it will offset the losses. If Bitcoin rally, you lose the put premium, but your spot price will be up. This is called protective put. It's a portfolio insurance. If you are an aggressive investor, like 12 to 15% of your portfolio in crypto, it's better to maintain your full position, but you need to set a sell order from 98k to 102k. If Bitcoin rally into FOMC because of the dovish rumors, take the profit. But you need to make sure that you are acting very disciplinedly over greed and prepare to add aggressively if it went below 87k. You must need extra 20 to 30% of the additional capital ready to deploy in this case. The biggest gain always comes when the others are panicking. Now phase 2, the actual FOMC meeting, the Jan 27 and 28. Day 1 is deliberation, day 2 is decision and press conference. Nothing official will happen on day 1, but market will move based on the rumors. Bloomberg and WSJ will leak some sources regarding the decisions as a rumors. Bitcoin can swing around 3 to 5% up or down with that rumor in the first day. But the rule is that don't trade on the rumors. You need to wait for the actual decisions and Powell's confirmations. Actually, rumors trades will kill more traders than the actual Fed decisions. On January 28, 2:30 p.m. Eastern Time, the decision should be announced. The Powell's press conference will start. This press conference matters more than the decision itself. Market will react on Powell's tone, body language, and word of choices. You need to understand what are the key phrases you should need to listen for. First one, hawkish, patient approach, watching inflation very carefully, no rush to cut. Neutral, it's more of data dependent, balanced risks, and monitoring conditions. Dovish, labor markets are concerning, ready to take any immediate actions. and downside risks are emerging. Trading rule: wait for at least 30 minutes after the press conference before making any moves. Initial reactions will be often raw. Let the dust settle. The real move only happened 1 to 2 hours after the conference. Once after the algo and institutions all are digest what Powell said. Phase 3, the 10 days after FOMC meeting. This is where you act based on which scenario will play out. If Bitcoin dropped to 85 to 87k in the first 24 hours, start accumulating at 87k, 84k and 81k. Use dollar cost averaging for 5 to 7 days after the FOMC. Don't try to catch the exact bottom, always try to do the averaging. The neutral scenario, the Bitcoin stayed around 90 to 95k itself and it lasted long. In this case, you need to hold your position. Do not chase any rumors or anything. You need to watch out the breakout above 96k and break below 89k for further movement. The sideways market is always reward the patience. In the dovish scenario, Bitcoin rallies to 100 to 102k in 24 or 48 hours. What you can do is add more BTC on the pullback to 96 to 98k. Set profit target at 105k, 110k and 115k, and you can use trailing stop losses to lock in the gains if you are familiar with that. Let me show you why this strategy will work based on the historical data from the Fed policy announcements. July 31, 2019, Fed cut rate first time since 2008. Market expected the dovish move, but Powell said it's a mid-cycle adjustment. Translation: that means there will be no aggressive easing. Bitcoin's reaction will be immediate drop from 10,500 to 9,500, like 10% or something. Then there was a choppy market after that for around 6 weeks. Finally, it rallied to 35% in October after market digested what actually happened. The lesson here is that do not expect the immediate reaction on every Fed actions. Secondary moves will always come weeks after. March 15, 2020, Fed cut rate at 0% and launches unlimited QE, one of the most dovish action in the entire Fed history. But everyone thinks Bitcoin just rallied, right? But it's wrong. At that time, Bitcoin dropped from 7,500 to 3,800 within 48 hours. It's literally down 50% at the time. Why? Because market don't rally on panic easing. It only rallies on opportunities. It's actually a crisis. So the main rally only comes after everything settled from the start of recovery. So the lesson here is that context is more important than decision itself. September 18, 2024, Fed cut 50 basis points, signals most cuts are coming. Bitcoin was sitting at 60k before the meeting. It immediately rallied to 64 and then pulled back to 62k. The actual rally just came in October and November. It went from 60k to 73k, like 22% up at that time. But the interesting fact is that that rally just reversed in December after the dot plot projection just came out in December. The lesson here is that the initial FOMC outcome will often get reversed by the new data or the correction on the data. So what does mean for Jan 28? So the immediate reaction is always an algo driven or emotional trade. The real move only comes after 2 to 3 weeks from the FOMC meeting, after the data confirms or contradict the Powell's message. That's why you position before, react carefully during and execute after. Before I wrap up, we need to discuss some wildcards that will override everything we just mentioned in this video. Powell's terms will end in May 2026, 4 months after FOMC meeting, and Trump is expected to announce new Fed chair in the Q1 itself. If he chose Kevin Wash, that will be a hawkish move. The rate will stay higher for a long time. On other case, if he chose Kevin Hassett, that's more dovish. There should be chance for more aggressive cuts. If Trump announces Wash before Jan 28, the market will price in for tighter policy. Bitcoin could drop 5 to 10%, no matter what Powell says. If he announces Hassett, Bitcoin could rally more based on the future easing or more cuts. This is a political wildcard. It's nearly impossible to predict the timing of these things happening. We need to watch very carefully. The Fed started the reserve management purchase from the start of December 31, 2025 itself. They are buying 40 billion plus in treasury bills to maintain the bank reserves. This is not actually a QE, but it will inject liquidity. If this purchase accelerates, Bitcoin gets more fuel to go further upside. Liquidity matters more. You need to watch the Fed balance sheet every week to check whether it is expanding or contracting. Let's assume we got a job data today itself. In that data, we can see that job growth literally went down and unemployment strikes. In these cases, the market will price in for more cuts. Bitcoin could rally 3 to 5% before the FOMC meeting. Conversely, if job data is strong, that means we will see further dip side for the Bitcoin before heading to the FOMC. For this, you need to watch NFP number very carefully to find out this info. So the bottom line is here, position for all the scenarios we discussed, but you need to be flexible for these wildcards we mentioned before, like the job data, Trump's announcement, and inflation, etc. etc. Alright, let's recap what we have discussed so far as an action plan for next days till FOMC meeting. Trim 25 to 40% of your allocation if you are overexposed on crypto, like more than 10% of your allocation. Set limit order at 87 and 82k for hawkish scenario. Consider setting protective put to ensure your positions, like the March put at 85k strike rate. You can check on that, and you can ladder sell orders from 98k to 102k if you are an aggressive trader. On the FOMC days, first thing you need to remember is that don't trade on rumors from the day one. Watch Powell's press conference starting from 2:30 p.m. Eastern Time live. Listen for hawkish or neutral or dovish languages. Wait at least 30 minutes before executing any trades. Next, post FOMC, execute based on which scenario is materialized. For the hawkish scenario, buy at 87k, 84k, and 81k. For neutral scenario, wait for breakout or breakdown. On the dovish scenario, you can buy more at the time of pullback to 96 or 98k and set target at 105 to 115k. The most important rules you need to remember is that position sizing is matter more than the perfect timing. If you're already uncomfortable with your positions, that means you're already wrong. Set the risk tolerance to 1 to 3% of your portfolio, not 10 to 20% or something. The goal isn't nail the exact top or bottom, it's to survive and make the profit along the way. Fed meetings are more volatile events, not like a quick rich scheme or something. Their defense first, then later it will offense us a second time. If you want more institutional grade or macro analysis for the crypto or Bitcoin, feel free to subscribe to my channel. We will be posting more videos very soon regarding the macros in a much more deeper. We are not focusing on like hype kind of stuff. We will be more diving into the data. In a couple of days, we will understand which scenario played out. But regardless of outcome, currently you are well positioned to make all the decisions we need to require for before the FOMC meeting. And now you have a clear understanding of how institutional money will flow around the FOMC meeting, so that you can build position for the long-term portfolio as well as for the short-term trades. I think this will be helpful for you for your next moves. See you in the next one.